good, guys? It is BJFX coming at y'all with another new video today. I hope y'all are all having a blessed day so far. Pretty much what I'm talking about in this video is how to trade GBPJPY. So this is by far my favorite pair to trade. A few different reasons for that. First reason being, this is a very volatile pair. Now, volatility can be a good thing or a bad thing. Okay, with volatility does come opportunity if you know what you are doing. So GBPJPY for the most part is a trending pair. So this pair does tend to trend very strongly when it is moving in an intended direction. So GBPJPY, we are on a 4-hour time frame. I want to start this walkthrough off on this pair. In early June right here, we noticed that price did make a high. So if we look in the past, we can see that we did have that major push to the downside. I actually projected that move on my Instagram back in August. I said that GBPJPY was coming down to that 120 level, and it did. Okay, but we noticed that price found this low, it pushed to the upside, it made a pullback, and it made another push to the upside, it made another pullback, and it potentially could be working on a fifth impulse to the upside to approach this previous level over here. Now, my style of trading doesn't really take this long-term move into account. For the most part, I am trading with the momentum, so I'm not worried about the long-term trend of the pair, as long as I am potentially getting in a short-term direction so I can catch the strongest move possible. Now, that style of trading is my style of trading, so it's not like this will work for everybody. You know, some people don't like getting in the markets when it's very volatile and all this. Some people like to get in a trade and hold it for the long term. You know, some people like wide stop losses. But for the most part in this video, I'm going to be showing y'all how to get the best entries possible, get out of the markets with good profits. So, yeah, what was I saying? Right here, I want to start this off. June 5th, early June, we noticed that price did make this high. It pushed to the downside, it made another pullback, made another push to the downside, made another pullback, and instead of seeing a fifth push to the downside, we realized that price failed to make that lower low, which would have overall completed that downward wave, and potentially could have even touched this previous level. Now, that is what I was projecting for the most part, until we did get a higher low being made here on this pair. So obviously we can see that price did make this level, showed some rejection, pushed to the upside, made another pullback, and then we had this level, which is higher than the previous one. So once I did see this occur, that did catch my attention. Once we seen this extremely bullish candle, basically what that was telling me is that something just pushed the markets to the upside. And if we take a closer look here, we'll notice that our 20 EMA, which kind of signifies when price is trending strongly, began to slowly creep its way up through our 50 moving average and our 200 moving average. So what that means is that the momentum in the market is picking up for the most part. Now, let me just say, you don't need moving averages on your chart. It's just something I like to have. I like the look of them on my charts, and it also sometimes will give you some extra confirmation that you might let slip your mind otherwise if you didn't have them on your chart. So there's benefits to them. I know some people like to trade strictly no indicators. EMAs are something that I just like to have, like I said, for extra confirmation. So what I did notice, that price did push to the upside, and around this upside push, we began to see this little trend line form. Now, of course, when we were right here around this consolidation, we didn't have that trend line form yet. The trend line is just something that began to form, but the moving average was already acting as a value zone, so that would have gave you a slight upper hand on when you could have potentially got into this. So let me go ahead and show y'all your best bet of getting in with this bullish wave to the upside. So once you see price reject here, you would potentially just be looking to see what happens next in the markets. Do we have a push to the downside with a continuation to the downside, or do we see another reaction off this EMA with a simple ABC move up to these previous highs? So it's obvious that we did get that second option. So I'm gonna show you how you could have traded after this breakout. So obviously 4-hour time frame is showing us a lot of bullish pressure. We're gonna want to go ahead and work our way down to that lower time frame. So let me go ahead and reset my chart. to have this looking clean again. And overall, the market, you could kind of see how this began to happen on the lower time frame. Price pullback, made a higher low than before, and then we are seeing a pattern occur here where we do have actual bullish movement in the market. So what I want to do is I want to pinpoint where this initial push to the upside actually started from. So it's obvious that we did get a touch of our level here, another touch of our level here, but the initial push to the upside didn't happen here, but it happened on this pullback before we had this initial push. So basically what I want to do is I want to take my Fibonacci and I want to bring it from the bottom of this push all the way up to the swing high. Now what this allows me to do is it allows me to separate myself from a simple break and retest type of trade. As we know, a lot of traders like to enter on a simple break retest and then they're buying in. Now the thing I don't really like about that is it doesn't keep your approach systematic. Okay, when you have a systematic approach, you're doing the same thing over and over again. It's keeping your emotions out of the way, and it's particularly separating you from having a subjective approach and keeping everything objective and clean. You know what I mean, guys? So overall, what I'm looking for is I want to see a pullback to the 0.5 through 618 level. Now I would then be one to go long. Somewhere in this key area, I would probably put mine on a 0.5, and I would go with a tight stop. Now the reason I would want to actually go with a tight stop is because the market is already turning in my direction. I'm a breakout trader and a reversal trader, so when I am trading breakouts, I have a wider stop because not breakouts, I'm sorry, a reversal. When I am trading reversals, I do have a wider stop just because we tend to get deeper pullbacks on a reversal. Okay. However, when you have breakouts, you're really anticipating a shift in one direction or a continuation in one direction after a pullback. So typically I do have tight stops, so I probably put my stop losses somewhere around here, around the 618 through 786, and I would want to see a pullback to this level. And that Fibonacci allows me to keep my rules in play and not just randomly enter on any level of price. You know what I mean? Because as a trader, when you're making the decisions over the long term, even the slightest decision you make can literally compound. So I like to consistently enter using the same approach depending on the strategy that I'm actually using. So GBPJPY, guys, I wanted to see we want to see a pullback to this level. Now once we get a pullback to this level, the 0.5 level, we will be triggered into this trade. Now I know you guys might be thinking, why 0.5? Okay, basically the Fibonacci does measure your pullback, so the deeper your pullback goes in the direction of a trend, the more possibility it has of being invalid. So if we see price push all the way down to this level, it would already be below this key zone. So at that point, that would be telling me that we potentially can have exhausted momentum. So if we do see that happen, I would then shift my bias and my overall sentiment of the markets from being me wanting to go long to me wanting to go short if we did get an insanely deep pullback. And then my approach to the markets would shift from being a break and a retest and a continuation to this potentially being a double top slash in formation with a pullback and then a reversal. So my overall outlook of the market when trading this pair is based off of what is happening as we progress in the markets. So we can go ahead and press play, and we can see that we had major movement to the upside. Now something I like to do on this pair is I like to look at my previous highs, and I like to ask myself, what is price doing compared to these previous levels on the chart? Is it acting accordingly? Is it breaking higher? Is it failing to break the highs? Is it making lower lows? You always want to ask yourself that. And we can see around this area, price did make a spike a little bit higher. So around that time, that would be TP1 being hit, and we could be targeting our next zone at the 618. Okay, and then we could see that we had another breakout, and this is present day. So TP2 would have been hit for about 110 pips, and right now the market is here. Okay, on GBPJPY, the market is here. And like I said, there's a couple different ways you can look at the markets, and you always want to keep an eye on what other traders are thinking and not just what you're thinking, because remember, trading is a zero-sum game. So when you're making money, at some point someone else's money has came into your trading account. That is the way it works. So you'll realize that you're in control of the size of your losses. So if you can keep your losses small, you can easily donate that money to other traders when you're trading. But when other traders are putting larger amount of capital into the markets, you can take bigger wins in. Okay, and I'm not trying to bounce around everywhere here, but you can draw this level out, and we got to kind of see what's going on here. There's going to be a lot of traders who potentially are going to be trading a break and retest of this market, aiming for these highs, and you're also going to have your traders who are looking at this double top formation with this wick rejection, who potentially are going to be wanting to sell off of this area. You're also going to have traders who want to get a pullback up to here and then sell off all the way to the downside. So you got to keep in mind there's a lot of different traders in these markets. So around this time, I typically wouldn't even want to trade this. I would probably scale out of my position here and then let the market do its thing. So this was the first trade example on GJ. On a tip of how to trade it, this will be a breakout to the upside type of opportunity. Now I want to go ahead and go to the 4 hour. Let's reset this. And I want to walk you guys through a trade setup that actually occurred here. Okay, trade setup that occurred here. So if we're looking at the higher time frame in the markets, we do notice that this was like a head and shoulders pattern potentially occurring. And then we do see a pullback to that same area. Now we did see price rejected once, and then it does make a second move. So something I like to do on the higher time frame is I like to draw my Fibonacci, and I like to see how it reacts to my fib lines, because once again, like we said, fibs potentially will be showing you how strong the trend is. So if a pair is trending, go ahead and do this. If a pair is trending, let's just say it's on an uptrend. If it's making small pullbacks, what that is telling you is that the trend is very strong. So if you draw your fibs here, you probably want that to be about right there. And if you see rejection off this 0.5 consistently, and then you draw another fib and you get more rejection off the 0.5 again, overall what that's telling you is that the market is very strong. Okay, if you begin to see something like this happen and your next pullback is like a 618 rejection and you're right here, you could potentially be seeing a 3-bar play, which could be a reversal to the other side. So you're always going to want to keep an eye on what price is doing according to the Fibonacci. Once again, you could kind of pinpoint this without the fibs, but just having them keeps things real clean and just allows me to pinpoint where I want to enter my trades. So if we notice here, we did have like a ascending trend line or whatnot form, but we do have a push up to this market structure again. So now what I want to do is I'm seeing that price did break the high. I see that price did break the high, but I'm going to want to work my way down to even lower time frame. And I want to see what the candles themselves actually does around this time. So when you begin to look at the markets, you can see that price did what? It made a double top around this area. And that right leg broke the neckline very strongly of this M formation. And you can also draw an ascending channel showing us overall that what? This is a buyer's environment, right? So we do see the double top, we do see a breakout, and the overall market structure of this time is telling me that we could see some selling pressure. Now, it would be a completely different story if we did see something like this occur and then price made a higher high, and that would be different. But being that price did struggle and it did break this previous low here with this leg on the information, that potentially is telling me that we could see some sort of shift in momentum. So once I do see the double top, what I'd be wanting to do is I take my fibs and I want to identify my swing low. So it's a simple move, okay, and you want to identify that low. And once again, back to what we were talking about with an ABC move. Okay, this is going to be A. We potentially want to see where our B is going to take place, and then we want to see that C move, which is another push to the downside. So if we notice here, I take my fibs, I don't include my wicks, and I want price to come up and touch my reversal zone. Now, as we know, with breakout opportunities, we usually will be wanting to enter on that 618 through 0.5 zone. Now, the reason for that is because breakouts, you're just looking to catch a continuation of a trend. Just like we just showed on the Fibonacci when we drew it with our lines, I showed y'all that you're looking for you're looking for typically small pullbacks with a trend. Now, when you're looking for a shift in direction, you want to see a deeper pullback, because that deeper pullback, is a shift in the change of the market's flow. Okay, it's a shift of the market's flow. So when we see something like this occur, and then I had to grab this again, then we see a break of these lows and then a continuation. You don't want to see something like this. You typically want to see price come up here and then make that continuation to the downside. So I want to see a push up to this level. Okay, and I'll go ahead and change the color of that for you guys. Let's go ahead and make it blue for now. And then we would be going short somewhere in this level, and then you could have tight stops as well, with potentially the 618 being your target. You also could be scaling into this, and there we have it. We were approaching our zone, and you also want to take a look what has happened here. Price had made this level. It's made a higher high, and then it did make a slightly lower low right here, and then it has made another lower low, also breaking these two previous forms of somewhat support. So right about when this happens, we do see a breakout to the downside, and overall that allows us to kind of see how this shift in the market actually occurred. Now you can go ahead and trade the rest of this push to the downside accordingly, because if you can get into the market at a proper reversal with this pair, you can be looking at a strong push to the downside. So you have a couple options. You could either hold it or you could rescale into it. So what I typically would do if I rescale into it is I would draw like an order block out, which is typically a consolidation where buyers and sellers are both going to be accumulated. And I'm going to want to wait for a breakout to one of those sides, and I would take my fibs from the high to the low, and I'd want to see if I can get a pullback. Okay, and you see how we got a pullback around this area. We potentially will go short around a 0.5 through 618, because once again this is a continuation now that we already have an established trend, and we would be potentially targeting those lows. And as you can see, TP1 was hit, TP2, and we can see if we could get a TP3 hit as well on this, and we did have a TP3 hit as well. So when it comes to trading GJ, for the most part, you're just going to want to identify these key forms of structure. Be okay with losing on this pair. Let me go ahead and say that. Be okay with losing, because this is a pair that you may have losses every now and then, but since it's very volatile, you're in control of the size of both. Okay, you can have potentially very large wins. Also at the same time, you can have potentially some very small losses. You're never going to have a big loss on this pair, because if you aren't managing risks, then you will have a big loss on this pair, just because the average daily range on the amount of pips. So make sure to keep that risk small, keep the potential reward nice. But overall, guys, that is it on GBPJPY. This is how you catch sniper entries. If you guys do want to learn more, go ahead, hit the link in my bio. You can get access to my full course for literally $50. Extremely affordable, not $297, not $397, not $500, not $1,000 for a course. You can literally get tapped into my program for $50. And this comes with my complete program showing all my strategies, showcasing everything I use, as well as my real-time Forex alerts whenever I do enter into a trade. And this is all with 100% transparency. So recently, trading for me the last couple weeks has been a little bit slow. Okay, it's been a little bit slow. I always keep 100% transparency. Haven't really had any major wins. We had like a 60 pip move on GJ. We had a 35 pip move on GBPAUD. A few other moves. I believe have a 70 pip move on RJPY, and a few other nice trades. For the most part, I believe we're like 7 and 3, and that was in the last 3 weeks. But things will pick up soon. If you do want to get tapped in my program, you want to learn everything from a full-time trader, go ahead, hit the link in the description. I'm looking forward to teaching you. If you do have any questions, feel free to message me on Instagram. I will have a link in the description for that as well. So I hope you guys all have a blessed day. Hope you did enjoy this video. Make sure to leave a like and subscribe if you haven't already. I'll catch you guys later. Peace.